The way you make everyday decisions is based on your personal code. You have your own rule book for your life. Like, let's say it's 8 p.m. on a Thursday night and your friend hits you up and they invite you to a comedy show last minute and you know you have work the next day. Do you say,
"Hell yeah, I'm in,"
or,
"No thanks, I need my sleep"?
your decision depends on your values, your wants, and your needs, whatever your current goals are. Do you prioritize fun or do you want to rest? Well, your finances work in the same way. Every day you are faced with financial decisions, big and small, and there are trade-offs involved in every single decision. In an ideal world, your decisions should be made according to your current financial goals, aligned with your values, your wants, and your needs. Yet, unfortunately, many people still struggle with day-to-day money decisions, often choosing decisions that go against what their longer-term goals are. According to NerdWallet, less than half of Americans feel confident in making financial choices. It goes without saying, money impacts nearly every aspect of our lives. So I want to take it back to the basics and explore different rules that you can live by with your money that can help simplify your financial decisions and keep you on track. In this video, I'm covering 9 money rules that you can consider incorporating into your life. Now, you don't have to follow all of these rules, just pick the ones that fit with your goals right now. In fact, there's one on the list that I'm gonna specifically tell you to really think hard before you consider doing it because it's not for everyone. So pick a few, try them for a few months, and see if they help guide your financial journey. Hello and welcome for those new here. My name is Lisa and I'm a certified financial planner who helps women of color build wealth. And no, you do not have to be a woman of color to watch my videos. You don't have to feel offended if you are a man. Anyone is welcome here to learn. I just want to make sure that women of color know wealth is possible for them too. Rule number 1 on the list is spend less than you earn. Another way you might have heard this is live within your means. So this is one of the most basic personal finance principles that most people agree on, and it's simply that you should consistently spend less than you make. Why is this important? Well, if you consistently spend less than you make, you will avoid falling into debt and you'll avoid cycles of debt, and you're going to prevent unnecessary financial stress. But more importantly, you allow yourself the ability to build your wealth and future financial security. You can't do that if you keep running out of money. So here's what this rule can do for you. It can increase your financial security. It can help you pay down debt faster if you use some of that extra money towards debt. It can help you save for your emergency fund. It can help you save for short-term goals. It can help you save for long-term goals like retirement and your long-term wealth. In terms of who should use this rule to spend less than you make, for this particular one, I'd say this is for everyone. The one exception I can think of is people who are in a transition phase. For example, I've personally had periods in my life where I was living off of my emergency fund. For example, when I got laid off. So obviously I did not have income, and even though I had unemployment income, that surely wasn't enough to cover even my basic base level living expenses. So I kind of was living beyond my means, but those are rare cases in life. Rule number 2, another one that you can consider, is if you can't buy it twice, you can't afford it yet. Make sure you throw in that yet part in there because I don't want you to think it's impossible forever. So this is a rule that helps prevent people from lifestyle inflation. That is, inflating your lifestyle before you can actually afford it. It's a rule of thumb some people use, and I think it's best used when you're gauging whether or not to buy a luxury item or something that's more of a nice to have. Why is this rule important? Well, this rule ensures that you are not stretching your finances thin for unnecessary purchases. Even if you have discretionary income, meaning extra money to spend, you can easily justify buying whatever you want with it, and that's fair, you can do whatever you want. But for some people who want to keep their expenses in check and ensure they're not inflating their lifestyle at a faster rate than their income, it's a good rule that you can try to incorporate. As mentioned, what this rule can do for you, it can help prevent impulse spending and it keeps your discretionary expenses in check. So who should use this rule? I think anyone can use this, but specifically, I think this would work great for people who struggle with overspending, as well as people who want to develop more mindful money habits. Moving on to rule number 3 on the list, which is the 48-hour rule, or the wait to buy it rule. This is another rule that helps with impulse spending, and it states that before you buy something, you wait at least 48 hours to do so. This gives you time to curb the impulse and think about, is this thing really worth spending money on? Why is this rule important? Well, delaying your purchases reduces impulse buying, and it just ensures that you truly want or need something before you go ahead and spend the money on it. Like we said at the beginning of the video, a rule like this helps you spend aligned with your goals, and not just because you made a split-second decision. You have time to think about it. So in terms of what this rule can do for you, not only can it save you hundreds or even thousands every year, but again, a rule like this can help you become a more mindful spender. When you practice habits of mindful spending over time, you're going to eventually break a bad habit of impulse spending if that's something that you struggle with. So on that note, who should use this 48-hour rule? I think this is great for anyone who overspends and wants to stop overspending, and especially those of you who tend to end up in consumer debt, like credit card debt, as a result of overspending. All right, moving on to rule number 4. Rule number 4 is that you must approve all purchases over blank dollars. In other words, I want you to be your own CFO, your own Chief Financial Officer. So before I tell you what it is, quick story. When I used to be an administrative assistant, I had to book travel and do other things like that for my executives that I worked for. The company paid for their travel, but we had to work within certain limits or caps on how much we could spend for each flight, for each car service, etc. So if there were no flights that fit within the limits, or maybe it was a really long flight and my boss really wanted an upgraded seat, then typically we could still do it. But before I could spend, I would have to get what was called a VP exception. So basically it required someone higher up to review the expense and say whether or not it was okay. So for this rule of being your own CFO and approving certain expenses, you don't really need someone else's approval. You're just getting your own approval. So it might sound a little silly. Basically, what you're gonna do is set a dollar amount in which anything that's over that amount requires you to spend more time thinking about that purchase before you approve it. For example, let's say your limit is $500. You are gonna impose a rule on yourself that if you wanna buy something over $500, you have the right to approve it, but you're going to go down a checklist first to make sure it makes sense. So that checklist could include looking at your budget or looking at your bank accounts or just making sure you can afford it before you approve the purchase. So a rule like this is important because it gives you ultimate control over your finances, but encourages you to be more mindful, especially with some of the bigger, larger decisions. What can a rule like this do for you? Well, using this rule in particular can empower you to be in control of your finances. I think it can give you power. And similar to some of the previous rules we already mentioned in this video, it can increase your mindfulness as it relates to your financial decisions. Who should use this rule? I think everyone can, but more specifically, if you tend to hoard money, or let's say you have the money for things, but you have trouble spending on it because you feel guilty and you don't like to part with your money, I think a rule like this could actually help you and ease your stress. So what you can do is set a line item in your budget for big purchases, or you can even name what the specific item is if you know what you're gonna eventually need to buy. And then when it comes time to pull the trigger and buy this big ticket item, you are going to check the budget. And after looking at the budget, you're gonna say, okay, I can actually afford that and I have the money set aside for it and I'm gonna give it my approval. Doing that process may make you feel more confident in actually moving forward with the purchase as opposed to hesitating because you don't like to part with your money. I think this could potentially help you prevent guilt or even buyer's remorse. Moving on to rule number 5 on the list. Remember in the beginning of the video when I said there's one on the list that does not apply to everyone, and I'm gonna forewarn you before you decide to use this rule. This is it. So rule number 5 is put every purchase through a credit card if you're able to. So let me say it loud and clear, this rule is not for everyone. Before you come at me, before you say I'm being irresponsible to even say this, I want you to remember this video is about sharing some ideas for some financial rules that you can consider only if they fit your situation. So I'm gonna start with who should not use this rule? Who should not use their credit card for everything? If any of the following apply to you, then do not use this rule. I don't think it's great for you. If you struggle with overspending, this is not for you. If you don't pay your credit card in full every month, then this is not for you. So if you currently carry a balance from month to month, this rule will only make things worse. And if you don't have full control over your finances or don't feel like you have a good money management system, then this also isn't for you. Now on the flip side, let's talk about why I would even put a rule like this on the list. How can this be beneficial? Well, if you don't fall into any of those categories and instead you do pay off your credit card balances in full every month and you are very responsible with using them, then using a card for purchases comes with a few benefits. Credit cards typically have better fraud protection than debit cards. Credit cards are safer to carry than cash. They're also easier to track expenses through monthly statements so that you have a hold of what you're spending on. Credit cards can also help build your credit if you use them responsibly. And of course, they have the potential to earn rewards like cash back, travel points, and other perks. So a few quick exceptions. This doesn't mean you should actually use a credit card for everything. If a credit card fee applies, then consider a different payment method because there's no reason to take on fees if you don't have to. So again, who should use this rule? Well, I'm not trying to get myself in trouble as a financial counselor, so I'm going to emphasize again. This rule is not for you if you have consumer debt or if you struggle with credit or if you don't have your finances in a good place and you tend to overspend. The rule does work well for people who pay their credit cards in full every month without fail and who are in a position to credit card hack, meaning strategically use your cards to get cash back, travel points, etc. Bottom line, if you use this rule responsibly, it can work in your favor. If not, if it's too risky for your situation, skip it. Okay, let's move on from that dangerous little credit card rule and let's move on to rule number 6, which is research at least 3 options before moving forward. When it comes to certain purchases, a lot of people make financial decisions impulsively or based on the first option they see. A rule like this, where you are considering several options before you make a purchase, it makes you slow down. It makes you more strategic with your decisions and choices with your money. It also gives balance because I'm not telling you to research 12 different options for a new TV, right? Just a couple so you can compare the pros and cons and you can have a good gauge of what the price range is. Now, obviously, this rule does not apply to every single item you purchase. It doesn't apply to produce at the grocery store or a brand new phone charger. If that were the case, you'd be spending all your time researching things when your time could be better spent doing other things. But I think a rule like this can work great for bigger ticket items, maybe electronics, maybe new shoes, a winter coat, or anything larger like a new car. A rule like this where you want to shop around can also apply to financial products like loans or insurance. A lot of people make financial mistakes in terms of regretting purchases due to a lack of research. So whether it's buying a car, choosing a bank, or signing up for a new service, just know you have options and it's worth shopping around. What can this do for you? Well, obviously, you do have the potential to save money. If you compare options, you might be able to find lower cost options or higher quality options. You'll be able to snag better deals. On the emotional side, doing this exercise can typically also reduce regret. You're not gonna feel like you settled for a bad deal because you rushed into it. You're gonna feel confident that you did some research, you picked the best one at that moment in time, and you're gonna go with it. So like I said earlier, who should use this rule? I think anyone who's making a big purchase, or even anyone who is signing up for a financial product, because there are lots to choose from. And of course, anyone who tends to make impulse purchases, or if you have a lot of buyer's remorse, then this is something to consider. All right, 6 down, 3 to go. Quick intermission to remind you all to subscribe if you're not already, and to like this video if you're getting something out of it. I really appreciate all the love on my channel and glad you guys are coming back to watch more videos. Rule number 7, pay yourself first. Or another way to phrase it is, don't pay others until you pay yourself first. What this means is anytime new money comes into your life, anytime paychecks hit your account, you are gonna prioritize your own savings and investments first before you pay your rent, before you pay your bills, before you go out to dinner. I mean, you can eat, but I'm talking about like going out and spending. So I talk about paying yourself first in many of my videos, so I'm not gonna spend a lot of time on it here. Just know that it is important for saving and investing because people often put that off. Oftentimes people save and invest as an afterthought if they have leftover money after they've gotten paid. Using the pay yourself first rule makes sure that saving and investing for future financial security is a priority. It makes sure that it's automatic and it's consistent. In terms of who should use this rule, this is one of the ones on the list that I feel very strongly about, that everyone should use this. So if there's any reason you feel like you don't want to use this one, I'm curious, let me know in the comments why not. But me, I love this rule. It has helped me save and invest so much money over the last 6-7 years since I learned about it. We're almost done with the list, 2 more. Let's hop on to rule number 8, which is don't lend money you can't afford to lose. Lending money to friends or family can be risky, and in a lot of cases, you may never get it back. The worst part is if that happens, it can negatively impact your relationships, if there's even a relationship after the fact. I know that some people steer clear from this no matter what, but the reason I'm including it in this video is because I know the reality. I know that in real life, there are people who want to help out people in their close circles. I've actually been both. I've been the one who's borrowed money, and I've also been the one to let people borrow money. So I get it. Even though it's something that I don't really engage in often nowadays, I have run into it in my life. And even though we want to hope for the best with our loved ones, you never really know what can happen. So here's why it's important to only lend money you're willing to lose. This makes sure that you are not going to harm your own financial future or put your own finances at risk just to help someone else. It makes sure that you only help people if you have the means to do it. If you incorporate this rule into your life, it's going to protect your financial well-being. It's also going to help prevent any resentment in your personal relationships, at least to a degree. I mean, if someone doesn't pay you back and they borrowed money, you might still be mad at them, but you'd be way more mad if they did that and your finances were ruined. So this helps put some protection there. As far as who should consider using this rule, I think if you've ever been burned by someone in the past, especially financially, definitely incorporate this rule. And I would use this rule if you're just someone who would consider letting someone else borrow money. I know at least some of you watching this are like, yeah, I would never do that. I keep my money separate from all of my friendships and relationships, and that's fair. You can just skip this one and let's move on to number 9. So last rule on the list that I think can help you with your finances is act like a raise or promotion didn't happen. So what I mean is, if at some point in your career, in your life, you get a pay increase, especially a big pay jump, like maybe you switch jobs and you get paid a whole lot more. If you get an increase, do not inflate your lifestyle, at least not immediately. Because this is the perfect time in your life to get ahead of your finances. And don't worry, you're gonna be able to treat yourself later. You'll be able to upgrade your lifestyle later. But when you increase your income and you keep everything else the same, this puts you in a prime position to level up and really get your financial foundations in place. So here's why it's important to do this. This rule makes sure that you're intentional when more money comes your way. Often I hear people say,
I'd be good if I could just get one more raise or just get a little bit more money.
but then when they get that raise, nothing changes. They aren't putting it towards their savings or investments or paying off debt. They've just inflated their lifestyle and are again wishing for more money. So if you can remember this for the next time you get that pay raise, just delay it for a little bit. 6 months, 1 year if you can, and get ahead of your finances before you go ahead and start spending more. Who is this rule for? Well, I think anyone, especially if you don't have your financial foundations in place, and anyone who wants to prioritize building long-term wealth. All right, I hope you all found something in this video that resonated with you. To summarize, the goal is to help you make day-to-day financial decisions a lot easier because you have a playbook to follow. You have some rules and guidelines that align with your goals, so they're easy to implement because you'll be able to remember them when the time comes. Until next time, peace out.